So what I see today is increasing uncertainty. People are losing confidence in governments. They lose confidence in currencies. They lose confidence in business models. Right? You got a great company of 1 million employees, but I'm about to automate out 957,000 of those employees with robots. Is that good for you or is that bad for you? Um, Lots of risk in the world due to technology, due to politics, due to monetary policy. So, what do people with wealth want to do? They want to run from the risk.
Hey guys, welcome to Everyday Finance. Michael Saylor has made a triumphant comeback to the public eye, portraying himself as an unrelenting supporter of Bitcoin. In his most recent appearance, he criticizes Donald Trump's proposed dollar-backed token as nothing more than political showmanship and implies that it is not as strong or durable as Bitcoin. Saylor's main point is that Bitcoin is the best digital asset available, decentralized, safe, and becoming more and more essential. But beneath the rhetoric, the data presents an engaging narrative. Due to sound capital inflows and systematic investor behavior, rather than speculative mania, Bitcoin is getting closer to the psychologically and technically crucial tilde $100,000 threshold. Bitcoin's realized cap, a particularly important metric, has now hit a record of approximately $891 billion, indicating that the total value of all Bitcoins, as determined by the price at which they were last traded, is higher than it has ever been. Analysts from Glassnode and CryptoCo generally interpret this as an indication of sustained confidence and long-term conviction. The pattern of accumulation is more telling than price alone. Despite the daily realization of about $1 billion in profits, both newer market entrants and long-term hodlers are actively purchasing. A maturing market cycle where strategic capital allocation, rather than emotion, is driving price discovery is revealed by this equilibrium between selling pressure and new demand. Analysts believe Bitcoin isn't just going to hit $100,000, but could be poised for a parabolic move well beyond that in the upcoming months if this trend, consistent inflows combined with increasing conviction, continues.
My view on investments is I'm extraordinarily enthusiastic about digital capital. That is, Bitcoin is digital capital. I think that's the no-brainer because it has all of the appeal of a digital monopoly, a monetary network. So if you imagine a Facebook for money or a Google for money, it has the technology trend on its side. And it also represents digital gold, and there's an extraordinary enthusiasm for non-sovereign store of value assets right now. So if you're looking for a way to avoid counterparty risk, to avoid a currency risk, and to tap into a global technology phenomena, then that makes sense.
Is it a safe haven
I think it is. I think
on par with
Bitcoin
gold?
much better than gold. I think that Bitcoin will be 10x, an order of magnitude more valuable than gold, and it will grow 20% a year beyond. When it's 10 times bigger than gold, it'll be growing 20% a year. So, yeah, it's I think the best investment idea in the world. I don't think there's a second best investment idea. I think that there's $450 trillion of wealth in the global economy that's sitting in store of value assets. You could call it long-term capital. Like, people just want to keep their money. And right now, if you have a lot of capital, you would buy real estate, you would buy private equity, you would buy public equity, you would buy collectibles, you might buy trophy assets. All of those things were pioneered in the 20th century. I don't have to tell you about the reason people buy them. I could write you an encyclopedia on the risk factors, right? Your buildings burn, hurricanes, flood you out. There are rent controls on your property. There are tariffs. Everybody in the world is in a tariff tantrum right now. Every single, what they say, the best laid plans of mice and men, they're dashed, given a change in the political wind. So I think there's profound conventional risk in private equity and public equity. Bonds all have massive risk because they're all currency derivatives. Trophy assets and collectibles like art, they have cultural risk. If you collect Picassos and the culture decides they don't value Picassos anymore, then your wealth is devalued. So I think when you look at the 21st century, the question is, how do I keep my money? Right? If I gave you $1 billion and I dropped you in Africa and I said, go ahead and buy anything you want, you can buy a diversified portfolio of real estate or equity or currency or bonds or anything at all in any country in Africa, or you can buy digital property that sits in cyberspace worth the same $1 billion, and you can move it on a thumb drive, or you can zap it from point A to point B on your phone, and you can custody it anywhere in the world on an hour's notice. I think you would choose for option B, and option B is what Bitcoin represents. So what I see today is increasing uncertainty. People are losing confidence in governments. They lose confidence in currencies. They lose confidence in business models. Right? You got a great company, you have 1 million employees, but I'm about to automate out 957,000 of those employees with robots. Is that good for you or is that bad for you? Lots of risk in the world due to technology, due to politics, due to monetary policy. So what do people with wealth want to do? They want to run from the risk.
After months of declining pressure, Ethereum is retaliating, and the indications of a technical breakout are becoming more compelling. Since December, when it dropped from its 10-month peak of about $4,100, ETH has been stuck in a bearish channel. When it broke above a critical 6-month descending trendline at about $1,600 on April 22nd, that changed. A wider market uplift brought on by improving macroeconomic conditions drove this bullish reversal. Following suit are momentum indicators. The Relative Strength Index, RSI, jumped sharply from 56 to 66 in just one day, indicating that bullish sentiment is becoming more dominant, and the 50-day Simple Moving Average, SMA, at 1,775 has now flipped into support. Although there is still significant resistance between $2,100 and the heavy supply zones close to $2,500 to $2,800, traders are currently aiming for the psychological $3,000 level. On a fundamental level, there are encouraging indications that Ethereum's ecosystem is recovering. The fact that total value locked, TVL, has increased 41% in the last month to about $52.8 billion shows that Ethereum-based protocols are becoming more widely used and trusted. The number of daily transactions has increased by 22% to 1.34 million. And the institutional credibility has been enhanced by a rise in deposits, particularly a 50% increase into BlackRock's BIDL fund. But there are still difficulties. Although it may seem user-friendly, Ethereum's transaction fees have fallen 95% this year, which weakens its deflationary token model by lowering the burn rate and makes ETH inflationary once more. Furthermore, compared to Bitcoin ETFs, which continue to draw capital, US-based spot Ethereum ETFs have recently seen net outflows of about $40 million. Ethereum's combination of improving technical indicators and increasing network activity indicates that the move toward approximately $3,000 is still not only possible, but also becoming more likely in spite of these obstacles.
Okay, I give you $1 billion of Siberian real estate, you can trade it for Bitcoin, would you? Of course you would. I give you $1 billion of Africa, you can trade it for Bitcoin, would you? Of course you would. I give you $1 billion of anything in Brazil, Mexico, Russia, pick any country. The general dynamic in the world's macroeconomy is this. People all want to move to the United States. People want to buy United States assets. People want United States currency. They want the most secure, the S&P index is up 10% a year in the US. The European equivalent, 1%, 2%. So what is the world trying to say? It says that the dominant network is the one we want. We don't want the second best or the third best. In the crypto industry, there are stable coins. There's the digital dollar and there's the digital euro. If you sit with the people in the industry and you say, well, what's the demand for the digital euro in Europe? The answer is 1%. 99% of the demand for digital currency in Europe is for the dollar, not for the euro. The euro is the second best.
Yeah.
If the second best is 1% of the best, what's the third best? The third best is 0.1%. So the big picture here is, in a world where people with wealth, with capital, are looking to preserve their money, how do you save it? And it's very simple. I convert my money from 20th century assets to 21st century assets. I convert from analog assets to digital assets. I convert from assets that are subject to nation state risk in Ukraine or Russia or Brazil or
perhaps
Africa.
right here in America.
Or in America. And when you lose confidence in your government, and I can find a large plurality of investors in every country on earth that have lost confidence and faith in governments, banks, industries, etc. When you lose that confidence, you run for a safe haven.
Yes.
What do you want to do? Put your money in orbit, right? In this case, there's no hurricanes in cyberspace. There's no tariffs in cyberspace. There's no monetary debasement in cyberspace. There's no bank to steal your money in cyberspace. There's no wars in cyberspace, right? So what's driving Bitcoin? It's not speculation. It's not accidental. It's the relentless passage of time that's causing intelligent, informed capitalists to strip risk from their portfolio by converting a 20th century asset into a digital asset. It's like water flows downhill when you're staring at a waterfall. It's not accidental that the water went downhill. It's not accidental that time moves forward. It's actually the relentless passage of entropy. It's the relentless act of informed people that want to keep their money acting rationally.
Is Bitcoin a hedge?
Over the long term, it is, and really what it is the future, right? If Bitcoin's growing 55% a year, it's going from what was a few million to a few billion to 100 billion to a trillion to 2 trillion. It's 2 trillion now.
Yeah.
It's going to 20 trillion over the next 4 years to 8 years, and it'll be $200 trillion in 20 years. My forecast is for it to be about $280 trillion by the year 2045. You could call that a hedge, but it's kind of like a hedge in the way that the United States of America was a hedge for Europeans when they were fleeing Europe for 200 years.
Yeah.
It's just the next frontier of economic development.
The stories developing around Ethereum and Bitcoin suggest a more general rebound in the cryptocurrency markets, supported by changes in the macroeconomy, an increase in institutional participation, and a change in investor sentiment. The rise of Bitcoin is now supported by deep-pocketed conviction from long-term holders and a constant flow of new adopters, rather than just speculative hype. Consistent demand despite high-volume profit-taking and realized cap data indicate that this isn't merely a passing rally, but rather the start of a new, more stable cycle. Ethereum's comeback, meanwhile, shows how smart contract platforms are adjusting and regaining traction following the bear market of 2022, helped along by advancements in institutional products, DeFi, and Layer 2 solutions. However, there are still differences. Ethereum faces outflows and concerns about its monetary policy, while Bitcoin is unquestionably leading in investor trust, as shown by inflows into spot ETFs. Nevertheless, the general consensus suggests that cryptocurrency is returning to a growth phase, one that is propelled by measured, data-supported advancement rather than euphoria. Indicating increasing maturity, both assets are displaying indications of disengaging from the conventional macro pressures that characterized earlier cycles. The conditions for a long-term bull run are developing as capital returns to the market and new infrastructure, including ETFs, staking products, and on-chain applications, gains traction. Compared to previous cycles, investors seem to be better informed, more strategic, and more ready. If these circumstances persist, the current stage might be the beginning of a revolutionary new era for digital assets rather than merely a recovery.